Hey, welcome back to the dive. Uranium is a commodity known for its abundant source of concentrated energy used in nuclear fuel. Our guest today will give us his thoughts from a technical standpoint, where this heavy metal is heading, together with crude oil, gold, platinum, and copper. The chief market strategist at thetechnicaltraders.com and one of our regular guests, Chris Vermeulen, joins us today. But before we bring Chris on, consider following our channel by hitting that subscribe button below. Joining us today is Chris Vermeulen from thetechnicaltraders.com. Hey, Chris, welcome back to the dive.
Hey, thanks for having me.
Yeah, thanks for joining us again. Okay, so Chris, we were hoping we could talk some commodities today. Let's start with uranium. Sprott introduced the world's first uranium physical ETF, which some believe could create a Wall Street Bets or Hunt Brother type move. Where do you see uranium heading from a technical standpoint?
Yeah, I haven't looked at the uranium futures because I'm not exactly sure where to follow that, but I've been following the uranium stocks. And of course, they have come out of, they've been out of favor for like a decade or longer. And they have turned a corner, and which is really exciting. As an investor, you look at one of these old beat up commodity sectors, which is it's kind of a signature move of commodity and commodity stocks, is they'll fall out of favor for 5 or 10 years. No one's interested in them. And then when they turn the corner, they can have some incredible gains. And that's what uranium has done this year. It's turned that corner. Finally, money's starting to go in. I think Sprott has probably tipped the scales and now has brought it onto everyone's radar. And of course, we've seen a huge rally in uranium stocks. And really, as a long-term investor, this is kind of like just getting started this year. This could last potentially many years. And you're looking at hundreds, thousands % potential returns in these stocks. So it's pretty exciting when you look at it as a big picture type of trend taking place.
So what about crude oil? Oil prices jumped more than $2 after industry data indicated a larger than expected drop in oil stockpiles and anticipation that demand will increase as vaccine rollouts expand. Do you think we could see a change in sentiment towards oil? How are you reading the oil charts?
Yeah, I think the sentiment there is pretty accurate. People are somewhat bullish on crude oil. I don't think they realize how much upside potential there is. Really, since the COVID crash, we have seen this series of wave patterns on the charts. And believe it or not, the technicals using bull flag patterns, using Fibonacci extension tools, which tell us the momentum, the power behind some of these moves in crude oil, it's actually showing us that we should be seeing crude oil's next upside target around $88 to $89 a barrel. So we're looking at potentially another 25% move in crude oil. And if we take a look at the energy sector stocks individually, they're actually very bullish. Just this week, they've turned that corner. They're actually starting a new uptrend. They're breaking out of a bull flag pattern. And we want to see energy stocks leading the way of crude. And both of them are moving up in sync here. So I think there's a lot of upside potential. I think $89 barrel oil is going to catch a lot of people off guard. And usually the market does what most people aren't expecting. So I'm bullish on crude at this point.
All right, so moving on to gold. Gold bugs have had a rough September, especially considering the input costs of mining. Some might argue the price isn't reflected relative to inflation. How are you reading the gold chart?
Sure. Well, gold broke into a bull market a while back. We look back from the big basing formation, which commodities tend to do, which we talked about in uranium, where commodities can fall out of favor for 5 or 10 years. Gold has done that. It broke into a bull market in 2019, started a very nice run to the upside. And right now, it's still in a strong long-term bull flag pattern. So we got this strong rally up. We've got this bull flag pattern, and you want to see price flag down against the previous trend. The previous trend is the flagpole going up. And so this is a very strong chart pattern as an investor. When this resolves, it should resolve to the upside. And this chart pattern here is pointing to $2,500, $2,600 for gold. But when we look at it in the near term and zoom into this price action, we can see here that gold actually has another about 4 or 5% potential to the downside over the next potentially couple of days, really at the rate that it's falling this week. That'll be a really critical level on the chart. If I just drew a line across this you can see this has acted as a critical resistance level on the chart. Then it became support, and then it became support again, and we could see gold flush down to those levels and try and shake things up. So I think there could be some more downside potential in gold. Now, yesterday it did slam the brakes on. If we were to take a look at just the short-term price action using a Fibonacci extension tool, we can get a feel of the momentum. You take the high down to the low, and then this bear flag, which is a halfway point using technical analysis, you can drag that over to the high here. And that tells us that if it's dropped down to here and then it's rallied back up, the next 100% measured move, this one means 100%, is right here at 1756. That's where it closed yesterday. It hit that level. So that wasn't much of a surprise. I was talking to subscribers in pre-market saying, hey guys, get ready because this could be a 1750 day for gold. This could drop. It hit that level. And so we've hit that level. Now we need to see what gold is going to do over the next few days, because we could see it do the same thing, form a little bit of a bear flag. And then we would take a Fibonacci extension from this most recent drop down to the low, back up to wherever it flags up. And that could bring us down to 1700, potentially even lower, down to the 1680 level. So from a short-term standpoint, we are in a downtrend. We might trade sideways here for a few days, but there still might be another leg down, and we could drop 5%, 4% from where we are.
Okay, interesting. Okay, so let's move on to platinum. We don't hear many people talking about platinum. Do you think this is a good thing? And what are the charts telling us about platinum today?
Sure. Well, platinum broke into a bull market this year. It had done one of those similar type of basing formations where it traded sideways for many years, finally broke out in December, January of this year. And since then, it's kind of rallied up, and now it's just fading back down. It's actually a very controlled pullback where it sells off, creates a bear flag, sells off, creates a bear flag. It has just been repeating itself in a nice controlled manner. Now it's settling back down into a lot of volume down in this area. So I think we're going to see platinum here start to find a bottom. And long term, I mean, this is still a very bullish chart pattern. When you look at it, we're making a series of higher lows. We got a low, a higher low. So far, we still have another higher low. We've got a series of higher highs. So I think this eventually will rally. And I think we'll see all precious metals rally together. So when gold and silver bottom, I think we'll see platinum and palladium bottom, and those will start to take off. But really, metals in general, as we know, have been out of favor for quite a while. And they just need to find a bottom here, and then they'll be off to the races. But right now, it's not the best spot to park your money.
Okay, so we're going to break a limb here. We seldom hear you mention copper. Do you trade copper? What are your thoughts about the copper market?
I don't have copper on this platform, but copper, what has it been doing? I mean, I think it has had a pretty good consolidation. I think it's been trading sideways for a while here, if I recall from looking at it a few days ago. Overall, it's in a consolidation phase. We need to see if it's going to break to the upside or break to the downside. I think metals, again, I kind of group copper somewhat into precious metals. We've seen them move together quite often, and really copper's in a bull market. It's had a strong rally this year. It's been trading sideways recently for several months, and I think it will resolve to the upside eventually as well. But again, it's in a sideways range, so it's not the best spot to park your money. You're better to wait for it to break either to the upside or to the downside, and then take advantage of that move, because it'll have a very big move when it does break out. It's a big pattern that it's formed.
Awesome. Well, thank you so much for joining us on the show again, Chris.
Hey, always a pleasure. Thanks for having me.
Thanks so much for tuning in. We'll be back again tomorrow with more great content, so consider subscribing so you don't miss out.